Well, those were the key headlines that we're tracking for you this evening. You're watching CNBC TV18 and this is Reporter's Diary. Let's go across to Shireen Bhan for the top story of the day, and that is the deal between the Tatas and Jet Airways. Shireen.
Well, it is official now. The Tatas have confirmed that they are interested in Jet Airways. After a crucial meeting of the Tata Sons board, which took place in Mumbai today, the group has issued a statement which says, and I quote, "Over the last few days, there has been growing speculation in the print and electronic media about Tata's interest in Jet Airways. We would like to clarify that any such discussions have been preliminary and no proposal has been made," end of quote. Well, this is exactly what we did state. We did say that today the Tata Sons board would not, in fact, sign off on any proposal, but what was going to happen was the Tata Sons chairman N. Chandrasekaran would appraise the Tata Sons board of where things stood with respect to the talks with Jet Airways. So this is the first official confirmation coming in from Tata Sons, saying very clearly that preliminary talks with Jet Airways are underway. Joining us now, Mark Martin, founder and CEO of Martin Consulting, Ajay Otani, founder and editor of Live from a Lounge, and aviation expert Devesh Agrawal. Gentlemen, appreciate you joining us. Ajay, let me start by asking you, it's the first official comment that's come in from the Tatas saying very clearly that yes, preliminary talks are on, but no proposal has been firmed up just yet. That's pretty much what we had reported as well.
Yeah, so I think this is the first sign now that things are moving forward between Jet Airways and Naresh Goyal and the Tatas. Now that the official signal has been made,
Ajay, we've got you on a bad line. Let me go across to Devesh and get a quick reaction from Devesh. Devesh, so the first official confirmation coming in from the Tatas, but I would imagine a point of concern will be the manner in which the Jet Airways stock has rallied in the last 2 days since the report surfaced of Jet and Tatas being in dialogue and in discussion to work out a deal. That, I would imagine, is going to be a point of concern, at least for the Tatas. But Devesh, it is now official preliminary talks, as the Tatas say, are underway.
Good evening, Shireen. Thank you for having me. You're very correct. If you recall, yesterday, as we discussed, the longer the Tata stretch out the deal, it would be more beneficial for them, in terms of low valuation. But quite clearly, this goes to show that the Jet Airways brand does have significant, shall we say, brand equity. It has strength in the mind of the consumer. So the issue was cash, and the moment cash comes into the airline, things can stabilize and the airline can go forward. Of course, the Tatas will obviously avoid the mistakes that have been made by the existing, management at the airline and move things forward.
Yes, Mark, good evening. First official comment in from the Tatas, but if this were to go through, and at this point in time, there is no structured proposal that has been given the go-ahead by the Tata Sons board. There is the matter of bringing Etihad on board. We don't know whether Delta could make some sort of inroads into the transaction that is being worked out at this point in time. But purely from a regulatory point of view, from a competition commission point of view, do you believe that there could be any hurdles with respect to these two, Jet and Tatas, coming together?
Good evening, Shireen. Great to be back on CNBC. Just a couple of things. I think we as we reviewed this last night as well. I think what's coming up clear is that we will, in the next week or so, see something coming up from Tatas, and I think clearly they've demystified the whole bits on rumors that whether they'd be interested or not. So I think the good positive bit is that the Tatas have confirmed that they have had initial talks. And with respect to putting up an offer on the table, I think it's not going to be that easy because we are looking at some kind of an open market offer to acquire the share of Jet in the market. So in that, we expect there to be some sense of a share buyout as well. We're not sure at this stage whether Etihad is going to be exiting, but we certainly know that, and I think this is based on some of reports that we've seen, that SIA is not going to get anybody to, have a free ride on their acquisition and investment. And coming up as far as Jet Airways is concerned, I think it's the obvious. Everybody wants to be quiet till some sense of a strategic outline is defined. We also do know that if at all there would be some sense of a market offer or an announcement or some step that should be announced by Monday or Tuesday, which is more critical. And obviously, as we know, this is a complicated country, so we are dealing with SEBI and Company Law Board and several steps that have to be built up to that. But I think the good part is that to sum up, Jet definitely has a second lease of life. They've got the much needed support, and we will certainly see Jet flying at least in our skies for another 10 to 20 more years. So that's a very good, very positive signal today.
Well, we don't know if we will see anything by Monday or Tuesday because the Tata statement is very clear. The discussions are preliminary. There is no proposal. And Jet so far, by the way, has always maintained in its communication with the exchanges, even in its communication with us, that the talks, the reports that we have been sending them with queries are speculative in nature. But let me go back across to Ajay. Ajay, so confirmation coming in from the Tatas. It's a plain vanilla statement. Not much more was expected anyway. But in light of what we've now seen, what would be the next steps that you expect?
I think the next steps in this case now, what will happen, Shireen, is that there will be a detailed due diligence. I think right now they're working off a preliminary due diligence to see if they want to go forward with this transaction or not. I guess if the board supports it, which would have been the reason why the statement came out this evening, now there should be a detailed due diligence and things should move forward from there. So I don't think, like Mark said, Monday or Tuesday is not a timeline that we are catching. It's going to be a little longer than that. To take this forward.
Yes. Yeah, I would imagine that it will be longer than that. In fact, I would expect that there will be some degree of cooling off given the way that we've seen the run-up in the Jet Airways stock. But in terms of what you would watch out for from here, Ajay, very quickly, any specific issues, areas of concern that you would watch out for from here on?
I think my key issue with this whole transaction would be not the financials. It's going to be the people. It's always the people who make or mar aviation transaction. And the same is in this case. Jet and Vistara are two different sides of a coin. Jet is very structured, very hierarchical, and very old. And Vistara is very newer processes, newer planes, everything's different about them. So they're as different, apart from the fact that they're full-service carriers, they're different as chalk and cheese. So will this combined entity be able to make it work is what the question is.
Okay. Devesh, before I let you go, and again, this is still in, clearly in the realm of speculation, but what do you believe is likely to be the fate of AirAsia India if this transaction were to go through? I mean, that's where we've just recently seen the Tatas picking up stake from Mr. Ramadurai, etc. What do you see as being the fate for AirAsia India, which really hasn't done very much?
In fact, I was just about to add a rejoinder to Ajay's statement that I said, apart from worrying about the strategy of integrating Jet into, whether it's with Vistara or something else, there has to be a lot of planning to be done. What Tatas have invested both in Vistara and in AirAsia, and exactly what is going to be the fate of AirAsia. While AirAsia is very small, one of the things very crucial is AirAsia has got sufficient capacity at Bangalore, where if Jet, Vistara, and AirAsia capacity is added, they will leapfrog Indigo at Bangalore. And as you know, Bangalore is a major hub for feeding the Tata companies. TCS is headquartered here, and, the IT industry, the knowledge-based industry, is a major user of air travel, both domestic and international. So not quite sure what exactly they might do with AirAsia. They might terminate their agreement with AirAsia, return the aircraft, because, after all, there are certain legal complications that are, going on with AirAsia. So it is altogether possible that the Tatas might just decide to exit, buy up the slots and capacity and, bid adieu to Mr. Fernandez.
Step in here.
Well, that's still... Yes, that could be a possible scenario. We don't know whether that will be the scenario that will eventually play out. But at this point in time, what we do know for certain is that preliminary talks, are underway between Tatas and Jet Airways. Whether it will finally culminate into a deal or not is the question mark. Ajay and Devesh, appreciate you joining us here on CNBC TV18.
Where the bulls ended the trading week on a high, the Nifty closed 0.5% higher and managed to stay above the 10,600 mark. The Sensex also saw gains of over 0.5% in trade, and the broader markets underperformed the benchmark indices today as the mid-cap saw cuts of over 0.25%. Now, the banks, however, continued their upward trajectory and ended the day 0.25% higher. Surbi Upadhyay joins us now with the day's trading action. Surbi.
Well, a good close to a good week. But there are some buts. Perhaps that's how you can sum up Friday's action. So the good news first, the market managed to see a buy on dips today. And in fact, we've ended very close to the highs of the day, with the Nifty once again approaching the 10,700 level. But that is the problem, because that is where it runs into key resistances around the 200 DMA. The other interesting facet of trade today has been that the buying was largely restricted to the bigger stocks, to the large caps, to the Reliances and the HDFC Twins of the world. The mid-cap arena was a little sluggish, and the mid-cap index was underperforming throughout. The market breadth was negative throughout the session as well. Let's talk about the gainers. And we have an unlikely winner today in the form of Bharti Airtel. A 10% move on that stock put it in pole position. It was followed up by consistent buying in Eicher Motors after their Tamil Nadu plant has reopened after the strike. And Reliance Industries, as I mentioned, was quite strong throughout, with almost a 3% gain for the day. Financials were again batting for the bulls, both on the NBFC side and the banking side. So today's key winners included names like Bajaj Finserv, Bajaj Finance, the HDFC Twins, as I mentioned, and even a State Bank of India. What didn't work today? Yes Bank for sure. It's one issue after the next, and now this was Mr. O.P. Bhatt's resignation, which led to another 8% drawdown on the stock today. And JSW Steel and Tata Steel from the ferrous side of the market were also under pressure. Housing finance companies have been under strain as well. That was a key facet of the Friday action. So whether it's Indiabulls Housing, DHFL, Canfin Homes, all of these stocks were down and out. Speaking of losers, let's get to some more names on the mid-cap side. PFC and REC on news that the government is going to persist telling REC to buy its stake in PFC. That news did not go down well with both of those stocks. And NMDC under strain again because of regulatory issues around a very important mine for them in Karnataka. Finally, if I talk about some of the winners on the mid-cap side of the market, then Jet Airways, hope afloat. 6% up move on the stock once again, hoping that we'll get some news from the Tata Sons board meet by the time we come back to trade on Monday. Vodafone Idea and even a Venky's.
All right, Surbi, thank you very much for bringing us that update. Now, here's another big event that the markets and the economists have been anxiously waiting for and tracking, and this is the RBI board meet that is scheduled on the 19th of November, which is the coming Monday. Now, the government, through its board members, is expected to raise some crucial issues regarding capital, liquidity and PCA norms. Now, the meeting holds significance because it comes amidst the ongoing rift between the government and the Reserve Bank over a whole host of issues. Lata Venkatesh joins us now with more on what to expect from this meeting. Lata, tell us through what are the key issues that will dominate the agenda.
Well, from the various public statements, it appears that at least 5 contentious issues will be raised at the board meeting. The first of them is the minimum capital that banks are required to keep. The Reserve Bank's rule for the last 20 years has been that 9% should be the minimum capital, but Basel rules, which is the internationally followed norm, require 8% capital, and that's what the government has been insisting on. It's expected that the board will also insist that RBI bring down the capital requirements so that banks can lend more. The RBI stands so far, and so far for the past 20 years has been that in India more capital is needed because it is very difficult to retrieve defaulting assets. The legal process is extremely long and cumbersome. The opportunity cost of money is high as well. The transaction costs like stamp duty, etc., are very high. So you can't really retrieve as much assets as you can. Loss given default is very high. They also point out that many Asian and emerging market countries have between 9 and 11% minimum capital requirement. The next contentious issue will be the prompt and corrective action filters. A bank is put into prompt and corrective action regimen or straitjacket if its capital falls below a certain level, if its net NPAs are higher than 6%, and if it's making losses for 2 years in a row. The government has been insisting that all over the world, it's only the capital filter that's applied, and therefore RBI too should remove the other two filters. RBI is insisting that provisioning in India is very, very little compared to global standards. Globally, in many dispensations, many jurisdictions, as soon as a loan goes bad, it's provided for 100%. In India, you provide 15% in the first year, and therefore, on an average, it's only about 50% that's provided for. A third contentious issue would be liquidity. Now, the battle began with arranging more liquidity for NBFCs. Chances are that may not be insisted upon because even lately, most bond market guys, including the much respected Keki Mistry, have pointed out that the NBFCs have found most of their commercial paper getting rolled over. So liquidity is not the problem it was a couple of months back. Therefore, the stress may be on generally providing more liquidity. The RBI has done open market purchase of bonds, but the government and its nominees and the board could insist for more. They could even insist on a CRR cut. A fifth and very important point of discussion would be a package for MSMEs and SMEs. The package could be in the form of a demand that the capital that must be set aside for a SME loan may be brought down. At the moment it's 100%, which means you have to provide 9 rupees for a 100 rupee loan by way of capital. That the demand could be that you bring it down so that banks give more loans to SMEs. It could also be that classification of a loan as an NPA be extended to non-payment of interest for 180 days instead of the current 90 days because SMEs by their nature are in a difficult terrain. It could also be a one-time restructuring. The last point, which was supposedly very contentious but may take a back seat, is the capital that the Reserve Bank has and which the government thinks is extra. Reserve Bank is seen as an overcapitalized central bank. That may have gotten toned down in recent days. We have heard the government saying that they don't want the RBI's capital, but they want a framework to analyze how much capital the RBI should keep. So some discussion on that is likely. Be that as it may, there are divergent and fiercely divergent views, and hence it could be a contentious board meeting.
All right, thank you for joining in with that, Lata. Now, indeed, all eyes would be on that crucial meeting on Monday. But ahead of that, we caught up with C. Rangarajan, a former Reserve Bank of India governor, who is of the opinion that the RBI board should not direct the governor, but should rather offer advice. And that's not all. He also feels that the government would be sending wrong signals if it uses Section 7 of the RBI Act to get its way. Verma to respond to charges levelled against him by the Central Vigilance Commission, and terming that 50-page report as a mixed bag and exhaustive, the Chief Justice of India, Ranjan Gogoi, told Verma's lawyer that future inequity was required into some charges. Ashmit Kumar, who was at the courtroom, joins us with more details. Ashmit, what were some of the key takeaways from today's hearing in the CBI matter?
Right, for just the benefit of our viewers, the report that is being spoken of is the CVC's investigation report into the allegations against Alok Verma. Keep in mind that the Apex Court was the one that had directed the CVC to go ahead with this probe, the caveat being it would be headed by a retired Judge Justice A.K. Patnaik. Now, that very report was submitted on Monday earlier this week before the Apex Court, and today was, of course, the hearing. There was a great deal of expectations in terms of clarity that was expected from the Apex Court on the way forward. What we have instead were observations falling from the bench headed by by the Chief Justice. Justice Gogoi observed that there appear to be some findings within the CVC report. He's gone through the report. There appear to be some findings which are favorable, which are complementary to Alok Verma. There are other findings on some charges which are not so favorable, or which are uncomplimentary. That's the word that had been used by Justice Gogoi. Essentially, the prayer that has been put across by the CVC is that the time wasn't enough, that there are some charges which require further investigations, and that they would need more time. Now, the Apex Court remains silent on the prayer for more time. What it has done instead is that it has taken that report and served it upon Alok Verma. Alok Verma will now have to come back and to clarify on the questions, charges that have been leveled, findings of the CVC probe. They will have to, Alok Verma's counsels will have to come clean on that. Meanwhile, Asthana's counsels were also present in the court. They made a vociferous claim, also seeking a copy of that report. Their prayer was explicitly rejected by the Apex Court. The Supreme Court has only served a copy on Alok Verma. He has time till Monday to come back with the reply. On Tuesday, on November 20th, is when the hearing resumes in this case. Back to you.
All right, Ashman, thank you very much for bringing us those details. Now, the government is moving ahead with its plan of selling its stake in Power Finance Corporation to Rural Electrification Corporation. Now, sources tell us that the Power Ministry is in favour of acquisition of government stake, but REC is pitching for a merger. Anshu Sharma has all of the exclusive details on this story and joins in now. Anshu, take us through what you've picked up.
That's right. Sources in Power Ministry have told CNBC TV18 that Power Ministry is in favour for the acquisition of government stake in PFC by REC. Remember, government has a stake of about 65.64% in PFC. Now, sources add that REC PFC acquisition discussion is at a sensitive stage, and government is mulling whether REC acquisition of PFC should be done this financial year or the next one, as REC will have to raise money for this particular transaction. Now, sources also add that REC has pitched for acquisition of PFC followed by a merger and integration. Now, company is of the view that merger and integration is quite important for the company's business if it acquires PFC. Now, PFC is not very keen on merger with REC, and even government's priority, if we understand from the sources, remains to sell government stake in PFC. As you know, that government is looking to meet the divestment target, and right now it is not very keen on merger. Now, REC sources say that company feels that acquisition of PFC without a subsequent merger will be a negative for the company, as PFC and REC are power financing companies in the sector and are competition. So now we have to see whether the government will take a decision to acquire for this acquisition in this financial year itself or not, and whether that will be followed by the merger.
All right, Anshu, thank you very much for joining in with those details. But it's a wrap on this edition of Reporter's Diary now. Thank you for watching, but news and updates will continue on the other side. Don't go anywhere.